Welcome to the Fabric Spotlight, a series of talks from various perspectives that we get from our guests on everything cloud and IoT infrastructure. Today, it's my greatest pleasure to announce my most favorite person, Sumant Mandal, who is the Managing Director of March Capital and also the co-founder of the Fabric. Welcome, Sumant.
Thank you. Thank you. You look good.
So, Sumant, we have known each other for a long time. We met, I think, around 2002, the first time. And I remember you giving me a term sheet for a startup which I didn't take, which you were glad that I didn't accept from you. But what has your personal journey been? It's from the time on or even before that?
So one thing is very certain. I knew much less in 2002 than I did now. Otherwise, giving you a term sheet would have never occurred to me. The other thing that's different is that my hair was dark and you had more hair. That was very different in 2002 than now.
I still have a lot of hair.
Yeah, it's hidden. It's hidden. But I think my personal sort of journey is getting into the venture business after getting out of business school in 2000, raising my own fund in 2004, the first fund I raised. Then opening an office in India in 2007-8, starting to invest there. In 2010, I helped Ravi co-found the Hive, and soon after that, with you guys, I think 2012, we started the Fabric. And then in 2013, I co-founded March Capital, which was really a stage-agnostic fund that would look at investing in companies coming out of the incubators as well as others. And since then, have raised 3 funds and have continued to do what I like doing, is working with entrepreneurs.
I knew you from the time when you were at a very early fund stage. I think, if I remember right, you started off at Idea
Labs, which is where the basic ideas around Hive and Fabric as structures came from.
Yeah, I was going to say 7 years back when Prabakar and I were thinking, okay, we'll hang up our booths, you suggested that we die faster, but you came up with the idea of the Fabric.
There was a lot of wine involved, I remember.
So tell me a little bit more about what gave you the thought for the Fabric as you talked to us, and it was very good. I mean, we have enjoyed working on this, but
there's multiple things. I think the Fabric as an entity is a very unique entity because at certain times in the world of technology, certain themes gave rise to a huge wave of innovation. And one of the themes was this movement of enterprise workloads from the data center to the cloud. The other theme, we are talking 7-8 years ago, which was it was still lots of enterprises fighting against it, not quite sure that the cloud is something that they could trust with their data, etc. And it's still an evolution, it's still changing, it's not 100% there by any means, but it's definitely something that was going to happen. A lot of work was required to get that to happen. And your experience, Prabakar's experience, the ideas, the ability to start things, not being afraid of starting things, sort of lent itself to that. And if you build an organization like the Fabric, which has a very narrow, deep focus in one area of technology, you generally will attract the best people, the best talent, the best energy around that. And so you can build something very specialized. I also thought that there's many people with great ideas who just don't have the experience of starting their own company, have never really started anything. So if they can work with very experienced people like you and Prabakar, more experienced today than then, but people who've done it before multiple times and have been successful, there's a lot of value that you can add to that ecosystem. So that was sort of the basic idea. I think, the first idea we worked on was Velo Cloud. Went through many different avatars and changes and shapes before it became Velo Cloud, before Steve Wu and then Sanjay and Ajit joined and became a company. It was a huge, super success for everyone who was involved. So it sort of gave more and more confidence and ability to do this again. I mean, that was sort of where it came from. It was just, I also wanted to continue to keep working with you, so I had to convince you to keep working. That was another idea.
That was a wonderful. Actually, I'm quite thankful that you convinced us to do this. As I looked at how you have been involved with us and also looked at your portfolio companies, a few things struck me. Some commonality between what Fabric does and what March invests in, also some of them. But you have done a lot of investments in the IoT space. Spark Cognition is an example, which is a later stage, I suppose. It's a bit more IoT oriented. then IODM, then there is Foghorn, a few investments. Along with it, there's a lot of security themes. CrowdStrike is an example of that. So I was just curious, is there a trend that you're seeing, or what caused you to make some of these?
So I think we had a belief system somewhat shaped by the work that was happening in the Hive and the Fabric, that the industrial world, which can be 25 to 50% of a country's GDP, manufacturing, oil and gas, transportation, logistics, is still sort of using technologies of 2-3 decades ago, and all of these sensors that are coming online and all the data that's been generated is just not being used, is being thrown away. So there was an opportunity to apply what we've learned in the IT space in the IoT/OT space. Now, having said that, as we've done a lot of these companies, we've also learned a lot about how different that space is from the enterprise space. Mm-hmm. The customers are often very large. The channels to your customers are also very concentrated. It takes a much longer time for people to make decisions, but when they do, the contracts are generally very large. Positives and negatives. Once you're in, you're very valuable, but it's very bulky, and you have to have a lot of fortitude as an investor to build these companies. We've been very lucky with the companies we've been involved in that have gotten good traction. Zage is another one using blockchain, but IoTM is a very good example. Spark is slightly different because it's doing predictive analytics. IoTM, Foghorn, etc. are doing real-time stuff. So, they have different evolution curves. And I think in the next 5 to 10 years, the industrial space will standardize. Today, it's still siloed. Mm-hmm. And as that standardizes, there's more opportunity to create value, and companies that will grow faster than they are growing today. Today, it is definitely sort of like the mini computer era of computing, where you had Wang and others, and everyone had their own silos, and then Oracle came and created a platform, and then lots of innovation happened on top of that. We don't see that yet in the industrial space, but it will happen.
Got it. How about the security space?
Oh, it's super crowded. And I think the challenge in security is to figure out which companies have the potential to be a platform versus being a point solution. Mm-hmm. And if you're a CISO today in an enterprise, which I think you would also agree with, you're trying to see how you can work with fewer companies rather than more companies. So it's very challenging for a startup to be in the security space. Having said that, cybersecurity is still very unsolved, and is continually unsolved because new threats and new ways to solve those threats, and new technology platforms, and more cybersecurity kind of platform to sit on top of it. So I think there's always going to be opportunity. My sense is any company that's building anything enterprise-oriented will have to have security embedded in it.
You have invested in a fabric company, Mesh7. You've also got CrowdStrike. Sage is another example of a security type play. Even IODM is a security play.
That's what you see. Sage is remote access with security embedded in it using blockchain. IoTM is secure connectivity. It's connectivity with security embedded in it. So you have to really think about security as part of a stack of how an application is being used.
Though Spark Cognition and Mesh7 are much more secure.
Much more. And so there's differences. Spark is bringing the endpoint security kind of stack to the IoT world. And so there's an open sort of, say, white space, and no big industrial company is going to put their data or connect their sensors into a cloud without some level of security, which is very different from the IT world. So, there's definitely areas that you can innovate in, but I do think if you're building an enterprise security company today and you're investing in it, either building or investing in it, you really have to think about how it becomes a platform.
Understand that. Along the same evolution of infrastructure, now the world has gone to distributed infrastructure. Have you any special observations? You see there are distributed services, distributed clouds, blockchain gives you distributed trust. Any thoughts?
Many thoughts. There's many layers of distribution. There's a layer of distribution in how applications are being built and then operated. Whether you call it containerization or other things that are happening. There's a distribution around cloud, multi-cloud, hybrid cloud. There's a distribution between the cloud and the edge, and edge computing is becoming even more interesting. This will get accelerated once you have 5G types of services. There are distributed applications that need to be, state has to be maintained, things that people wouldn't have imagined 5-7 years ago. And I think The reason it's happening is it gives a lot of flexibility to the application developer. It gives a lot more efficiency to the user, the actual consumer of the application. And as these fundamental new technologies like Edge and 5G come together and you have absolutely low latency networks, you can call it a distributed app, you can call it a low latency app. I just think the opportunity set for creating new companies that provide new value is going to be exponentially larger. So it's exciting, but it's still new.
Nice. Sumant, when I first met you, I always thought of you as an early stage person who took big bets on early stage.
I'm older now.
And I remember when I got Ankina going along with Prabakar, you started putting money in before I even had a single slide of PowerPoint, let alone having anything. What has changed over a period of time?
Well, early stage companies are still a big part of what I do, and they will be. It's just the average age of a company going public is now closer to 11, 12 years than maybe 10 years ago. 5 years ago, it was maybe 5 to 7 years. So the private markets, or the ability to invest in a company at a later stage while it's still private, is actually exponentially larger than it was 5, 7 years ago. And I'm not even talking about pre-IPO rounds. I'm just saying, generally speaking, companies are raising a lot more money privately than they were doing earlier. So that's one reason. There's just more opportunity in later stage. Second, you find there are many inflection points in a company's journey to be successful. The first inflection point is one of creation, where the fabric gets involved. The second is when you first put your product into the market and you start building a team. The third is when you're scaling and you're starting about becoming from a product a platform. And so, I think there's an ability to invest at any one of those inflection points. You still have to have a belief system in people. You still have to have a belief system in technology architectures and the longevity of what you've created, or the differentiation. So we're in no way, shape, or form a numbers-oriented, multiple type of investor. We are a technology investor. I am a technology investor and will always be. But I have realized over the years, as I've seen my own early stage portfolio grow up and become late stage and go public, etc., that there are different inflection points where you can still do very well as an investor. So I think it's just more additive than it is exclusive.
Is this a broad trend in the industry, in the investment industry? And then who fills the early stage gaps? I've noticed that funds are getting larger and larger.
I think it's a very good question, and it's very hard to compete and compare in a big fund, an early stage $3-5 million investment compared to a later stage $20 to $50 million investment. If you do both, it's a question that has an evolution over time. Kleiner Perkins is a good example of a firm that has gone through this evolution, where they have now separated their late stage fund from their early stage fund. And Mary Meeker and her group have gone on and they've created their own fund, which is $1 billion late stage fund. And Kleiner has reinvented and raised a $350-400 million fund just to do early stage. On the other hand, you have funds like Lightspeed and Sequoia and others that are raising massive pools of capital, multiple billions, to do late stage investing while still being really good at early stage. I have a lot of respect for those firms. They've done very well. So I think this will evolve. And if you look back 5 years ago, there's so many seed funds. I mean, there's so few now. Those are kind of gone away. There was no such thing as a vision fund. I mean, who the hell knew there could be a $100 billion venture fund? We never really thought that. So the industry is much larger and it's evolving, and it'll continue to have sort of ebbs and flows around what stage is more. The market comes, the stock market crashes, suddenly everybody's going to be doing early stage. So it's driven also by returns and where they are, right?
Yes. You meet a lot of entrepreneurs, and also the Montgomery Summit, which folks
Jamie does, yeah.
Jamie does also gets a lot of entrepreneurs. Noticed that you get some sterling speakers over there. Over a period of time, Eric Schmidt, Peggy Johnson, Andy Jassy. How do you manage to attract these quality speakers as well as quality entrepreneurs?
I think over time, as you build your brand, you start and relationships, and you've been in the business long enough, you get to know people. I think that's just one. But a lot of these people come because they are also very interested to stay close to and in touch with the entrepreneurial ecosystem and be close to where things are being created and getting tractions. Because if you're in a large company and you're running a multi-billion-dollar revenue unit, you are generally insulated from what's going on in the innovation economy. And you have to then react to things that are happening almost in real time without any context when you have looking at an investment or an acquisition or a new product investment, etc. So it's it works for them to be involved in the early stage ecosystem as well. And they all like to be with each other. So in some ways it becomes serendipitous. People like to be with other people they like are, and I think that's how it's worked for us. One of the things I think has been great for our portfolio companies is when you have access to that kind of ecosystem and those people, you generally tend to shortcut a few of the things people have to deal with when you're trying to do deals with larger companies or look at strategic investments or partnerships. I mean, last year we had the new CEO of Ernst & Young there, Carmine, who, since he was there and he's been actively involved in our company, now half a dozen of our companies are working with E&Y to get to their customer base. So it's kind of a business development motion in some ways, and in some ways it's people. I would always tell the entrepreneurs, it's up to you. We can create the environment, but it's the person running the company that has to go make it happen.
Absolutely.
So talent is our biggest issue, Rajan, as you well know.
To wrap up this conversation, Sumant, but what I'd like to, you have been a phenomenal guide also to both myself and Prabakar, speaking for myself.
I only give you suggestions.
So what would you share as suggestions or guide for new entrepreneurs and anything? It's a free flow of what you give.
Yeah, I mean, at the end of the day, you can't force someone to be an entrepreneur. It has to come from inside. It's really about what you're passionate about, what you understand and know, what problem you're seeking to solve. The most successful ones I have seen are pretty firm in their beliefs and yet open to feedback. So you have to be firm but not obstinate in some ways. There's a balance there. You also have to be self-aware, which is you have to understand what you're good at and what help you need around you to make yourself successful. Because no one person can ever build a company. The company, by the very nature of the word, means more than one person.
Thanks very much, Sumant.
Absolutely.
And please stay tuned for our next Spotlight series. We'll have many more exciting speakers. Thanks again.
Thank you.